Welcome to the midweek edition of Business Morning on Channels Television. Good morning. I'm Ini John Mekwa. Well, let's get updates from the world of business. U.S. oil prices are up for the fifth day to their highest since 2014 amid global concerns about energy supply and signs of tightness in crude, natural gas and coal markets. Brent crude prices also climbed for a fourth day under supply anxiety, particularly after OPEC Plus decided to stay with their planned output increase rather than boosting it further. U.S. West Texas Intermediate oil earlier rose to $79.18 a barrel, the highest since the 10th of November 2014. The market was up 0.15% at $79.05 a barrel. Brent crude added 12 cents to $82.68 a barrel after rising to a three-year high in the previous session. Late last month, the OPEC Plus Joint Technical Committee said that it expected a 1.1 million barrels per day supply deficit this year, which could turn to 1.4 million barrels per day surplus next year. Well, coming to Nigeria now, $201 billion. That's a net loss the global aviation industry will incur between 2020 and 2022. And that's because of strong economic headwinds caused by COVID-19. The Director General of the International Air Transport Association, IATA, Willie Walsh, who made this known to a large gathering of CEOs, says although the situation has been slowly improving in recent months, the pandemic has ravaged the aviation industry worldwide, especially as travel restrictions to curb the spread of coronavirus infections sap demand. He also mentioned that overall global revenues this year expected to grow 26.7% to $472 billion, while the industry's losses are expected to fall to $11.6 billion next year before returning to profitability in 2023. And Nigeria needs to have the right policy and regulatory framework which will allow an enabling investment environment for the advancement of the country's economy. And that's according to the Lagos Chamber of Commerce and Industry. In a statement released to journalists, the president of LCCI, Mrs. Toki Mabogunje, explained that the policies and regulations must foster business competitiveness at national, sub-regional, continental, and global levels, while the environment must support businesses, preserve investment, and create job opportunities. She also mentioned that genuine commitment to implementing key reforms would not only stimulate output growth, but would also put the nation on the path of macroeconomic stability over medium term. Well, supply constraints are ravaging a lot of industries around the world, especially in the UK and in Europe. But it doesn't seem to be affecting the manufacturing sector here in Nigeria. We'll talk about that. That'll be after the break. Do join us. You're welcome back. Supply constraints, which consist of semiconductors and other raw materials, have been affecting manufacturers in Europe and the UK, but Nigeria seems unaffected as the Manufacturing Purchasing Managers Index, that's the PMI, which is a gauge for manufacturing sentiment, has shown signs of recovery. It's achieved 50.3% points, I beg your pardon, in September. And that's according to a data by FBN Quest and NOI. What are the implications of this? And this is a 3-month high. So what are the implications of this on manufacturers and the economy as a whole? We have a manufacturer from the pharmaceutical industry, Dr. Lolu Ojo, the Chief Executive Officer of Merit Health Limited, to speak to this. Good to speak with you, Dr. Ojo. Good morning.
Good morning. How are you?
I'm great. And you?
Good morning.
So in the UK, registration of new cars, we talked about this yesterday on the show, dropped to very low, more than 20-year low, because of lack of sufficient semiconductor and materials for production. But it doesn't seem to be affecting Nigeria. We talk about this in Europe, in Germany, in the UK. But Nigeria seems to have escaped the impact of that. How come?
Yeah, thank you so much. You're picking a particular sector of the industry because what I read is about new car purchases in the UK, which seem to be dropping because of raw material shortage, particularly semiconductors. But there are other factors that may be impacting UK car purchases, new car purchases. These include factors like uncertainty around the Brexit, the COVID restriction. You will recall that the impact of COVID on economies like that of UK is much stronger than it is here in Nigeria. This is a country that is moving towards low emission. So all these one combined, see the observed patronage, particularly as compared to what it used to be. In Nigeria, the semiconductors that you talk about may not have such a huge impact in Nigeria because we don't do such much of those electronics that require semiconductors around here. But it just shows the resilience of our economy, which means that if we get things right, we could really get to our right position and we could really be the whole of Africa's economy base. And to me, that's the lesson that we should take from that. It's not for us to roll out the drums and be celebrating.
All right, so when we say that the PMI has hit a 3-month high of 50.3 points, what does it mean exactly? What does it say about the economy? What impacts are we supposed to see from this?
Yeah, the Purchasing Managers Index actually saw the prevailing trend in the manufacturing and service sector. And what it does is summary is to say, is the market expanding? Has it remained the same or is it contracting? And this is huge in managers, as filled by purchasing managers. It has a figure between 0 and 100. So anything above 50, it shows that the market is expanding. And below 50, still some negative signs in the economy. So when we have a PMI 53% or about, it shows that we're on the upward swing. Oh, yes, we're on the upward swing. That is exactly what the PMI index indicates. The purpose of having the PMI really is to look at what is the current situation, what is the future trend, and this is the information that top managers, policy makers use, to plan and determine what should they do, where should they play, and what kind of investment should be done in a particular sector.
But there are concerns as to whether this actually reflects the reality in the sector. Since we have hit 50, it means we are in a progressive trend. But some people think it doesn't really capture the reality in the sector.
Yeah, this is the challenge with statistics. You could have this going up, this going down, but the impact on the ordinary man on the street is what we want to look at. If our PMI is higher now, does that mean that people's lives are better? Does that mean that the goods are cheaper? Does that mean that people can purchase them? But these are things that we need to look at. So the fact that the PMI is going up versus what is used to be, and I mean, to me, it's like a ray of hope. It's like telling us that, look, we still have something to be proud of. We still have something that can be better if only other factors combine. Other factors combine are good. For instance, PMI is going up, but what happened to our Naira? Our Naira is being devalued. something that I bought for 50 naira yesterday, I may have to spend 100 naira to buy it now. So many other things that will not make all these things to show on the life of an average person on the street.
So is there a way to actually capture the reality so that we don't keep having this discussion of these are the statistics, but the reality is different? From your perspective, is there a way to merge it so that the statistics can truly capture what's really happening?
Well, it has to be a total picture type of thing. To me, what we need to do is look at the entire country as a whole and be able to say, hey, if we need to impact the life of our people, then certain things must be there. Certain things must be there. Now, security situation. Okay, my plan today is to be actually loot by 10 a.m. I left my house since 8:30. I tell you, I've not covered up to 30 kilometers since I left because of traffic. So everything is at a standstill. So whatever it is that I want to do in that place, which has both commercial and social impact on what I'm doing, is stalled. I can't move. And it didn't start today. It has been here. It has been here forever, and we see it every day. And there seems to be no solution. So when we do things that are not superficial, when we do things that has depth and can impact people's life, then statistics will be full. Then statistics will feel it. So when you tell somebody that, Lord, do you know that our manufacturing is going up because our PMI is now 53? Then yes, I feel it, because now we can move freely, we can do this, we can buy this, we can do all sorts of things. I want to believe that we manage an holistic type of management that takes care of people, takes care of people's life, impact their personal, their family, their business life. Then the statistics will reflect reality on ground. But as it is today, yeah, something is going on. Economy is growing by so percentage, but nobody is feeling it. It's not okay. The statistics is useless.
And then the cost and access of foreign exchange still dominates conversations in the business space. What's the true situation for manufacturers at this time?
Well, I can't claim to really be speaking for all the manufacturer, but from my vantage position as a businessman and the chairman of the Research, Documentation and Industry Liaison Committee of the Pharmaceutical Society of Nigeria, I can tell you that things are really not good at all when it comes to Forex. And when you come to Forex, you'll be talking of many parameters. Number one will be the exchange value. I mean, you could just suddenly wake up and dollar we're buying for 360, uh, which is not even the official rate then. Suddenly jump off. And now you have to struggle to get the same dollar for 560, for 570, and whatever. So that is number one. Then access. Well, when you have the money you want to buy at that 500, where is it? So that is the problem that manufacturers have. One big problem again is the kind of debt, that manufacturers incurred in dealing with government in particular. When you buy goods and you produce it at cost of 360 naira to $1, and you are not paid, and suddenly dollar jump up to 570 or more to naira, then you are in trouble. If you have to pay back, if you have to restock, that is the problem that we have. And that is why one is paradoxality, not better because fluctuations. The demand that trust that 30,000 naira a month can do me that, possibly because of the high interest rate, it can do much because our system is market dependent. I mean, import dependent. We import, yeah, do manufacturing, and that is why. But the inputs are mostly imported.
All right, Dr. Joe. Well, unfortunately, Dr. Joe was supposed to speak with us from Luth, but like he noted, he was caught up in traffic, and so we had to just walk with that, and that's why the network is not so strong. But thank you so much, Dr. Lulu Joe, for joining us, the Chief Executive Officer of Merit Health Limited, for sharing your thoughts with us on the PMI that was just released yesterday at 50.3 points for September. So we'll take a break now. When we come back, we'll head to AFEX Commodities Market. That's after the break. Do just stay with us. You're welcome back. The total number of commodities traded on the AFEX exchange dropped by 82% for the weekend at the 4th of October, where SCI and AEI were unchanged. As usual, we have Michael Martins, portfolio manager at AFEX, joining us for the details. But Michael is not at our Abuja studio today. I think he's somewhere doing work and having fun. Hello, Michael. Good morning.
Hi, Henny. Good morning. It is always a pleasure to be here.
Yeah, good to have you too, Michael. So bring us up to date on happenings of the week to the 4th of October.
All right. Thank you very much, Ini. So just to give you a summary of what happened on the exchange in the week under consideration, the total value of transactions traded on the exchange fell by 82% from 834 million naira to close the trading week at 148 million naira. And the total number of contracts traded on the exchange also fell by 22% from 7,701 contracts to close the trading week at 5,980 contracts. We, however, saw a slight increase of 18% with the number of deals from 33 deals to close the trading week at 39 deals. The ACI, which is the Apex Commodities Index, and the AEI, which is the Apex Export Index, both remained unchanged at 427.34 points and 168.08 points, respectively. With regards to the volume of contracts traded on the exchange, we generally saw a slight increase, only with sorghum, which went up from 0 contracts to trading 4,625 contracts this week. With regards to other commodities on the exchange, we saw a decline in the volume of contracts traded, with paddy rice falling from 3,352 contracts last week to trading 387 contracts this week. We also saw a decline with soybean, which fell from 1,493 contracts last week to trading 872 contracts this week. And lastly, we had maize, which fell from 2,370 contracts to trading 21 contracts this week. With regards to the price changes on the exchange, we generally saw grain with sorghum and cashew nuts, with sorghum going up by 9.17%, gaining 1,865 naira in the contract value to close the trading week at 22,205 naira per contract. And we also saw grain with cashew nut, which went up by 2.42%, gaining 1,076 naira in the contract value to close the trading week at 45,576 naira per contract. With regards to the red that we saw on the exchange, maize was the major culprit, which fell by 11.99%, losing 2,741 naira in the contract value to close the trading week at 20,121 naira per contract. And lastly, but certainly not least, we have paddy rice, which fell by 1.67%, losing 366 naira in the contract value to close the trading week at 21,498 naira per contract. So those are largely some of the biggest changes in price, volume, and also in terms of the summary of what happened on the exchange in the week under consideration. And as we always mention, and if you want to know beyond what is just spoken in this show about the commodities market, you can always go to our website, which is www.apexnigeria.com. And you can always download our app if you want to get started trading commodities, which is available on iOS and also on Android.
Markets in the third quarter. The third quarter has ended just at the 4th of the year, including factors that might have affected the market. Let's look at also the outlook for next quarter, especially with the new season and the harvest, still on. How would you say the commodities market performed in the third quarter when you compare it to the second quarter and the first quarter?
Thank you very much, Ini, for that question. So I think the general dynamics of the commodities market is pretty much clear at this point. So usually in the first quarter of the year, that's when you essentially have a whole lot more demand and you still have a significant, portion of supply into the market. So you tend to see prices rise the first quarter of the year. Some of that also continues into the second quarter. And then you start to see a general decline in the commodities market in the third quarter of the year. What we can say from the data that we have on the exchange for this particular third quarter in comparison to the previous quarter is the fact that price changes are generally uneven, right? So if you look at commodities like maize and paddy rice, they both fell by 3% and 5% respectively. However, due to the scarcity that we had for other commodities like soybean and sorghum, and also due to the increased demand that we have for these commodities, the prices went up significantly by 16% and 21% if you're measuring the changes quarter on quarter. So as I said, right, prices are generally uneven in the quarter under consideration. If you look at the export market too, for the most part, prices were tapered with very little movement in either direction. Just to use the indexes that we have on the exchange as a proxy, so the ACI, which is the FX Commodities Index, fell by 9% this quarter. And then also the AEI also fell by 12%. And that just gives you a general idea of what is going on in the commodities market in this quarter in comparison to the previous quarter. So prices generally have been uneven. The sentiment is that prices have been falling, particularly for export commodities, and then also for some of the major grains that we have on the exchange. So those are largely some of the dynamics that we've seen play out on the exchange.
So what drove the decline in prices of most of the commodities?
So two things, essentially, right? I think the first thing ideally would be that in the third quarter of the year, everybody knows that most of the commodities are out of season. So there's generally a low demand for commodities around the third quarter of the year. So usually most of the companies that need to buy these commodities have done so in the first quarter and also the second quarter of the year. And I think another major issue that would have contributed to falling prices is also the fact that we are having the onset of harvest. And then for some of these commodities too, a lot of them are coming to the harvest, are harvesting these commodities much earlier than we expected. And that would ideally also speak to maize and paddy rice, which is why their prices are falling significantly this quarter alone. So those two things generally, the lower demand that we have for commodities, and then also the anticipated harvest, and also the actual harvest that is happening for some of the commodities on the exchange.
And how is the exchange getting ready for the new season? Also, are there insights into how this could help to boost food security in the country?
So thank you very much for that question. So in terms of what we have done in anticipation of the new commodity season, we have spoken in times past about the EP financing program that we did this year. So this year we're able to almost double the number in comparison to last year, doing an approximately 65,000 smallholder farmers. And that has implications both on farmer productivity and of course the eventual volume that we expect to be traded through the exchange. So that's that on the smallholder farmer productivity side in terms of also production. And then we also have, also on the exchange, we've significantly increased our storage capacity by more than 70, going on 80%. And that increases our ability to serve multiple players across the agricultural value chain and provide storage as a service, to those players, whether that's the smallholder farmer, the processor, or maybe even the trader, whichever the case may be. And lastly, but certainly not least, we also have the ASP program, which is a program that we essentially developed to sort of empower small and medium-scale agricultural entrepreneurs, to sort of empower them to replicate Apex's activities of smallholder farmers. And we believe these three things, right? So productivity, storage, and then also empowering small and medium-scale, entrepreneurs are essentially things that will bring us to the point of being food secure as a country. So these are some of the things that the exchange has put into place from a physical perspective, and we believe that they would contribute in a significant measure to making the nation more food secure.
So what's the outlook for the market in this fourth quarter?
So like I said last week, right, we are expecting a significant production number this year. in comparison to last year due to the fact that we had higher prices, and then that essentially incentivized smallholder farmers to cultivate a whole lot more this year than they did last year, in order to take advantage of those higher prices. But we are also taking a look at some of the other factors that could potentially, affect the commodities market, which is ideally the exchange rate. The exchange rate crisis that is currently going on in the country, and then also the insecurity issues that we have in the country. So with regards to exchange rate, we speaking about the fact that there is a very strong correlation between what happens in the exchange rate market and then also what happens in the commodities market. And that's partly due to the import parity issue. And the insecurity issue too can also affect the movement of people, goods, and then also maybe most importantly commodities, from one place to another. So in terms of outlook, we can't say anything definitively now until, of course, we get the actual numbers out. But what we are also most concerned about in terms of the fundamental factors that could affect the market is also rainfall. So we are expecting the rainfall to start, to stop in earnest, so that people can smaller farmers can essentially start drying those commodities, before they start selling. And all of this would ideally feed into one major thing that every single participant in the commodities market is looking at right now, which is basically price. We are hoping, best case scenario, that those prices correct significantly before the start of the new harvest season, because that would have implications on the nation's ability to also be food secure, and then also the purchasing power of the average Nigerian. So we do expect those prices to fall. Whether or not they eventually do, we can't say definitively yet. But all these factors would essentially contribute into what we see play out in terms of prices on the exchange or even in the commodities market.
All right. And what else does FX have planned for this new quarter?
So the truth is this, right? We've at different points in time, right, spoken about the variety of different opportunities that are available within the commodities market, and then how different participants can sort of partake in that. So we believe that for the most part, what we're going to be doing in the fourth quarter of the year is a lot of market education, right? So to essentially educate people about the opportunities that they can avail themselves to within the commodities market. So we're going to be doing a lot of that in the fourth quarter. We also have the ABCP program, which we're launching, which is essentially a financial product that helps raise, finances and capital for processors within the agriculture value chain. We also have, spot contracts which are due to go live in the month of November, which essentially allows small and retail investors to partake in the commodities market. And like I mentioned last week too, we have made these spot contracts cheaper so that a lot more people can participate in the market. So we've made them from 100 kilogram to 1 kilogram, meaning that the average spot contract, which used to be worth about 20,000, per contract, is now worth an approximate 200 naira per contract. We also do have market makers that we are onboarding, and some that we are fully onboarded, to just sort of also help with the liquidity on the exchange. And so these are some of the things that we have put into place for the fourth quarter of the year. And we are anticipating a great commodity season. We are putting all our eggs, I believe, in the right basket, and we do expect to have a great commodity trading season.
Yeah, well, we're looking forward to that exciting quarter that FX is promising. We look out for those things that you have said, Michael. Thank you so much for joining us. Michael joining us from Abuja, even though he's not in the studio. He's a portfolio manager at FX. Enjoy the rest of your day, Michael.
Thank you very much, Amy.
So let's move now to the market where we'll have Will standing by. But first of all, we'll just take a moment and we'll come back. We'll go straight to the markets. So Will is standing by. Hello, Will. Over to you.
Hello, Ini. Good morning. Equities are hot like coal.
Like really hot
like coal. Because you see that
over 1% up. I mean, I can't remember the last time we had that.
It is mind blowing as I'm speaking right now. It's got the bullish momentum for equities switched onto a completely new level as the benchmark index, advanced by 1.18% there to 40,716.66 points. Now we're even advancing to the 41,000 level. I'm waiting to see that. And then also more good news, the market capitalization has also reclaimed the 21 trillion naira mark. And the last time we saw that was early this year. Now, investors' interest in Airtel, especially First Bank, Airtel Africa, which was up about 6.3%, following its share buyback plan, boosted the impressive performance. And consequently, the month-to-date gain has increased to 1.2%. And wait for it, the year-to-date gain return has reversed losses. We're currently speaking of a year-to-date gain of about 1.1%. Overall, it was a positive sentiment in the market as well. There were about 32 gainers to 19 losers, and turnover was also positive. We saw the total volume of trades increased by 114% to 432.99 million units, valued at 3.13 billion naira, and exchanged in 4,382 deals. Across the sectors, the banking index was up 2.5%. This was largely driven by First Bank Nigeria, and its share price increased by almost 10% yesterday. The oil and gas index also was posted gains, while the insurance, consumer goods, and the industrial councils made a loss at the close of trading yesterday. But to give us more insight, we have joining us on the phone now Afolabi Benro, trader at Stanbic IBT Stockbrokers. Good morning, Afolabi.
Good morning, Will. Thank you for having me.
Well, Falabi, first things first, congratulations on the NGX reclaiming the 40,000 level and now the 21 trillion naira mark. How do you feel about this? Share your sentiments, please.
Yeah. Very, very positive, actually. It's very good to see that the NGX index is inching up. Of course, everybody is happy, and we hope to continue to see it inch up in the coming days and going into the end of the year also.
Oh, great. So can this be sustained? Because we're seeing this happening now. It's kind of like sudden. Are we experiencing a bubble here? Is this a stock market bubble?
Funny enough, this is contrary to the expectation that we actually had. I'm thinking about this same time last year when we started to see stock prices inch up. We're starting to see sort of the same thing. But I think right now it's a lot of speculation that's going on in the market. Like you mentioned earlier on, yesterday's buzz started with First Bank. Was up 9.76%. This morning, again, we are seeing First Bank up another 10% with quite decent volumes traded. So, I think going today, possibly tomorrow, we expect to see the positive momentum continue in the market.
We're seeing that the banking index rose. We mentioned that at 2.5% yesterday's trade, thanks to First Bank Nigeria. But what's particularly, we want to know what's driving the interest in the stocks of First Bank. As we're speaking, we just say speculations, but what? Is there any news in the markets? Tell us now.
No, there's no. So, we haven't heard of any particularly new information that's out in the market, which is why I'm saying it's mostly speculation. Brokers probably taking position ahead of anticipation of improved performance in the stock price. So I think that's what's basically driving it now. We haven't seen any sort of like concrete information that's come out to suggest that the price should be where it is currently today.
So what's happening at the consumer and industrial goods counters? What we're seeing that industrial goods traded flattish yesterday, negative flat, and then insurance was down 1.15%. What's happening there?
Yeah, so in the industrial goods, Q-Tix actually lost about 1.01%, but the impact on the index wasn't so much particularly. The rest of the counters there were pretty much flat, not much happening there in terms of price movement. Looking at the consumer goods, yesterday we saw international breweries lose about 6.25% to close at 4.50 kobo. We saw PZ lose about 5.2% to close at 5.45 kobo, and then we also saw flour mill down about 2.34% to close at 29.20. So it's just basically negative sentiments going on there in the consumer space. In the insurance, universal insurance was actually the driver of the volumes there. We traded about 105 million shares yesterday.
We're going to go flip back to the ICT where we have Airtel Africa. They have announced a share buyback plan of about 8.2% of that 61 billion, I think, of their shares. What's driving this? Why do you think they want to buy back the shares from minority shareholders?
Looking at the whole transaction, so Airtel Africa is actually the listed entity. Airtel Nigeria is actually the subsidiary of Airtel Africa. Airtel Africa owns about 96% of Airtel Nigeria. Airtel Nigeria is the one that is made the offer out to the minority shareholders. So generally, looking at it from our point of view, we think if the deal goes through and all the shareholders tender the shares, it will be definitely positive for shareholders of Airtel Africa. Currently, Nigeria makes up about 40% of revenues for Airtel Africa and about 51% of their operating profit at the first quarter. So definitely it would be a positive one for shareholders of Airtel Africa if it goes through.
We saw that their share price went almost like very high yesterday. That must have driven the investor sentiment
to 760 naira.
Yes.
So that's positive for the stock as well.
Okay, so what's your outlook? What do you think? Do you think this bullish sentiment in the market is going to persist? You're looking at maybe in a month's time. Are we going to hit the 41,000 level, maybe say next week, this week? What do you think? What do you...
I mean, right now, I'm very happy about the performance of the market. I'm also thinking about it and asking myself, what's actually driving it? A lot of things have been changed. The macroeconomic environment is still the same. So, I'm still sort of tapering my own expectations. I'm happy about what's going on now, but I think looking probably down a month's time, investors will start asking again. I'm looking for catalysts, i.e., what is going to drive the stock, or what's going to drive stock prices up, or what is going to sustain performance at these levels. And without any of those sort of catalysts in play, then you'll probably start to see some profit taking and things slow down again.
Okay. So we're just going to just one quick one. An analyst said yesterday that we equities are the best place to invest at the moment. Basically, if anybody would invest right now would get up to about 12% yield. Do you agree with this?
So, it depends on which stock you invest in and what level you go into. Because, if you look at the dividend yields, it varies from stock to stock. So, I'll partially agree, depending on what stock you go into and at what price you go into the stock.
Okay, thank you so much, Afolabi Benro, for that insight. Afolabi Benro is a trader at Stanbic ITC Stockbrokers. Now, we'll move over to the unlisted OTC market, where it was not a very good move for them yesterday. They were down 0.62%. The market cap reversed the gains recorded in Monday's trading session, and almost 4 billion naira was knocked off the market value in it. So it's not very pretty for the NASD market in it.
It's a very like the opposite of what's going on in the equities at this time. And I think for the equities, perhaps it's Christmas gift come early. We hope it lasts till Christmas.
Hope it does.
All right, thank you so much, Will. For now, we'll take a quick break. When we come back, we'll do an opening call to London. Do stay with us. Yeah, welcome back. In the UK, the RAC is warning that petrol prices could reach an all-time high before Christmas. This amid signs that the number of petrol forecourts running dry was easing, but could be replaced by concerns about how much it would cost. Well, we have Juliana joining us from our London studio now to bring us up to date on happenings in the UK. Good morning, Juliana.
And good morning, Ini.
So the Prime Minister, Boris Johnson, is sounding really confident ahead of the Conservative conference, even when there are concerns about job gaps and this issue of price hike. Has he been giving hints ahead of his speech?
Yes, let me just prepare you to set your timer for what is likely to be a box office performance by the populist Prime Minister Boris Johnson. He's due to take centre stage in Manchester on the final day of the Conservative annual conference in about 40 minutes. We're hearing it is going to be very Trump style. He'll be surrounded by his loyal Tory ministers and lots of Tory supporters in the kind of grandstanding way that the Prime Minister does like to address a crowd. Of course, he hasn't been able to do that really because of the COVID restrictions. So even in Parliament, he's had to try and make a speech on his own terms rather than gearing up support. And that's what he's going to be doing because, as you just outlined, he is facing a mounting crisis here in the UK. He's tried to deny that there's a crisis. He says that really what Britain is experiencing are just some of the tweaks and knocks you would expect when a country is coming out of a pandemic. But that's not the case. In fact, there is a mounting backlash from business leaders who are not happy that the Prime Minister is trying to dismiss, which clearly is a crisis that we're seeing. You know, high energy prices, panic buying at the pumps, a shortage of labour, a shortage shortage of supplies. This is being experienced in the PMI data that we've been seeing. So let's just see what he is going to say. Obviously, I'll have an update for you at 1:30. But like I said, Eddie, make sure you set your timer to watch his speech.
Yeah, my stopwatch is already counting down. Surely we'll watch out for that in just about 15 minutes. 11:15 Nigerian time. But Tesco has reported 16.6% rise in first half core retail profits in spite of the supply chain disruptions we've been talking about. How did they manage this, and how is the market reacting to this?
Well, according to Tesco's bosses, they've been able to get this mounting profit, which has doubled, by the way, to £1.1 billion in the 6 months to the end of August, because they are fully supplied. They've been able to keep their shelves stocked high, and it is a massive performance for Tesco, which is Britain's biggest retailer, the largest grocer we have here in the country. Their shares are up 3.37% this morning. In fact, they're the biggest riser out of the UK blue chips, and it is because they've seen an absolutely amazing year. They have cited staycations. We saw an explosion of staycations in the spring and the summer because people were so confused about whether or not they could travel. And also there were lots of sporting events. We had the delayed Euro 2020 games. We also had Wimbledon. The weather at times was okay, so lots of people were buying, and they were choosing to buy from Tesco, so much so that bosses have also raised their profit expectations for the full year too.
All right, Juliana, thank you so much. I will certainly get updates from the Prime Minister and the markets at 1:30 during Business Incorporated.
Thank you.
So let's head to the crypto market now. The global crypto market is still bullish as the market cap has recorded 2.22% boost in the last 24 hours. It's now at $2.21 trillion. Even the total market volume is over 12% more in the last 24 hours. It's now worth $118.26 billion. The total volume in DeFi is currently $16.39 billion. That's 13.86% of the total crypto market 24-hour volume. The volume of all stable coins is now $90.90 billion, which is 76.86% of the total crypto market 24-hour volume. Bitcoin, the king of crypto, its dominance is currently 43.81%. And it has an increase. That's an increase of 0.85%, and its price is as at 8:30. I know by now it's changed. It's over $51,000 though. That's a 3.67% increase since yesterday when we spoke. That's about 24 hours. And let's look at the alts, the king of alts now. Ethereum early this morning was about 3,455 after gaining close to 2% in 24 hours. Its 24-hour volume is 16.73 billion naira. We have Gilbert Jokwata joining us now to comment on this bullish sentiment and other issues. Hello, Gilbert. Good morning.
Yes, good morning.
So just before we delve into the market, the US SEC has said that it has no intention to ban crypto. I mean, you guys are really happy about this, but as the markets are reacting to this statement?
Okay, what's your question again?
The US SEC has said that it has no intention to ban crypto. So that should give you guys some peace of mind. But I'm asking if the markets have started reacting to this.
Okay, that actually is a positive news. Even though we believe that such statement from there is going to drive investors' confidence on the long term and bring in more accredited investors into the market. But it is actually beyond this. The close above the $50,000 zone signifies a confident macro bull rally and the end of the consolidative downtrend. Though the market looks technically good and strong for this next leg, but we still have a memory spot of $48,000 our downside and $51,000, $57,000, and $60,000 as a reaction point as the bulls fight for dominance. So investors are not just also looking at BTC at the moment. They also have their eyes on alt, which you could also see with them having a positive day in the market. Generally, investors' confidence are high, and we also have a greed also on the increase. Technically, we are very good and ready as well. news as that also is also positive for the market, since it will also drive the positive sentiment which it needs for price rally.
Yeah, it's good you mentioned the alts, because I was going to ask about Doja and Shiba Inu also looking bullish. What's driving that? Or is the meme coin season back?
Okay. Whenever there are more buyers and sellers, you will always see prices move up. But we always look for sentimental narrative to it. And it was easy to spot the coin master, Elon Musk, doing what we always know he does in the market. He made a tweet with a picture of a flocky, which drove in buyers all of a sudden. You know, he has a very large influence as well in the market, both in the crypto market and also other markets. But once he did this, the price also of Doge moved alongside with him. And right now, you could see a correlation between Doge and Shiba as well. So Shiba moved as well. Investors are as well becoming greedy, which I actually think will sustain this rally as well.
It's a good time to dive into the market or to hold?
To hold. They actually have a long-term projection in prices in regards to their targets for Shiba and Doge as well. So they are holding at the moment.
Okay, all right. Gilbert Jokwata, a crypto market analyst, thank you so much for your time on the show this morning.
It's a pleasure having me.
So just before we go, let's look at the gainers list now. XRP is still on the gainers list. Binance USD made it to the green list again today. The marginal, same with USD coin, but the largest gainer with almost 11% is Doge that we talked about. It's now 26 cents. On the flip side, we have Binance coin, which lost 0.75% to settle at almost $431. Cardano was up $2.18 this morning. It shed 1.96%. Solana also shed 7% to settle at $155.64. And what was going on with Terra? Yesterday it was down 2%. Today it's down again 8%. Well, those are some of the alts that we are also looking at. Well, that's it on the program today. Do remember to join us at 1:30 p.m. when we have Business Incorporated. We'll have more updates for you from the world of business. I'm Ini John Mekwa. Enjoy the rest of your day.